Hello everyone, a very good morning, good afternoon, and good evening to all, depending on which time zone you live in. This is your host Vaibhav for this session of the JForex Indicators Explained, where we will be considering one of the interesting indicator. The name is percent Bollinger Bands. We will see how we can use a defined, not defined, a derivative version of this indicator, and this indicator has extended parameters, so the name has been modified to reflect that, and it is called percent Bollinger Bands Extended. So we will take into account the earlier classical uses of the Bollinger Bands, and we will see how we can modify certain parameters to give us a better idea of the sentiments prevalent in the market, and then plan our trades accordingly. So for that, we head to the JForex platform, which has been developed by the Dukascopy Bank SA. This is the Euro USD chart of the hourly candle print. Now here you can add these indicators by going to the overlap studies, which uh, which contains these Bollinger Bands with the extended parameters. Let me check this list where it is exactly. Oh, in the list, we have gone through the list and where it is. Alright, if we are unable to find it, we will simply do a quick search. And as the name suggests, quick search is a quick search. So here we get this percent Bollinger Band with extended parameters. This is a lookalike of the percent Bollinger Bands. The only thing is that it has got extended parameters to play with. We can customize it in certain combinations which were not really possible with the prior version. So that's the change compared to the simple percent Bollinger Bands. And if we plot the original percent Bollinger Band, you will observe that there is not much change in terms of its combination. If we consider, it is also based on the moving average and the standard deviation. So here both of these are similar, and these extreme values plotted at 0 and 100 are almost similar. The only thing now we will consider are these differences in the editing options provided to us. So we have here these options where we can go with a different combination of the standard deviation for the upside as well as for the downside, and we can also change the moving average type, and these options are not really available if we simply use the prior version of Bollinger Band, the percent Bollinger Band, where we can only change the candle period calculation period of these moving average, and the deviation remains fixed on the both sides. So there is a big change compared to the prior version. Now coming back to the interpretation, we use this indicator to get a good idea of the volatility for underlying instrument, whether the underlying instrument is trending or whether it is sideways. We can pretty much determine using its price action data, and the moving average gives us a good idea of the trend, whether it is bullish or bearish. So considering the standard deviation along with the moving average, we get the idea of the trend as well as the strength of the trend. So we can go for the trade in such a manner where we will have both these things on our side. We can optimize the entry point, and as we are also taking the moving average into consideration, we will have the trend on our side as well. So we now see what editing we can do. So for that, I will give you some example of the changes which we observe when we go for different applied prices. So this is the classical plotting with the applied price of the closing price for these candle period data. Is the moving average which has a base of EMA, the moving average type is EMA, and the hourly candle's closing price is being used for the calculation purpose. And here, as I had explained to you in my prior session also, whenever we see the value of the last closing price dipping below the lower band of this Bollinger band, we get this output value of the percent Bollinger band in negative territory below zero. And if on the higher side, we have the closing value of the last hourly candle on upper side compared to this upper line, upper band of the Bollinger Band, then we see the value, the output value of the percent Bollinger Band going beyond these 100. So these are extreme values, the above 100 and below zero, and this is the standard range. When we have the closing values of the hourly candle within the lower and upper band, then we have this output within these two extreme defined limits. These are not precisely limits, these are more of a marker where we get the good idea of the underlying instrument's volatility. If we have the price action converge closer to the middle band, then we will have the output value of the percent Bollinger band somewhere close to this 50. So in consolidation period, you will have this output value of the percent Bollinger band hovering closer to 50. But if there is strong move, then we will have these values deviating far from the moving average price, and these extreme values will be reached. Now we can plan the trades accordingly. We can play with the overbought oversold conditions, and also if you simply want to keep it with the trend, then I think depending on which side you are getting the breakout from the middle line, that is this 50 line, we can also go for a trade. Whenever we have this fresh breakout on either side, we can go for the trade on trade we can go to trade on that direction. Otherwise, if you simply want to go for the regression moves where you expect the consolidation to happen after extreme deviation from the median price, then in that scenario, these extreme values can be utilized. But we have to figure out the combination which is likely to bring us good profitability, a better chance at making money. So for that, we have to customize this combination as per our requirement, and that's where these the parameters which we can modify comes into play. So for that, we have these options provided to us. Now coming to this price, we can apply the close price, open price, high price, low price, median price, typical price or weighted close price of these last hourly candle close, and depending on that we will have different plotting for these output value of the percent Bollinger Band extended. So now please pay attention to this plotting. As and when I change this applied price, you will observe that the plotting for these percent Bollinger Band changes to some extent, and that is pretty much expected. All right. So here you can observe that it has again changed. Now we go to the low price. With the lower price, we have these more time below this lower band, and when I use high price, we will have more time above the higher line, upper line. So the deviation will be tilted on this side when we use the high price as the applied price, and when we use low price, the deviation will be tilted on these lower side. Okay, so that's pretty much on the expected lines. If you simply want to use the median price, which is the half of high plus low price added, we get this plotting in a similar fashion. Then we can also use the typical price, where we consider high, low, and the closing price and divide it by 3 to arrive at a typical price for the given security. We can also use the weighted close price. We have this option of giving more weightage to the closing price and then dividing it by 4. So all these applied prices carry their own particular characteristics, particular peculiarities, and I would suggest that you try out this combination and see what works best for you. Then if you use the lower time frame as the calculation period, you will have lot more changes and a lot more responsiveness in the plotting of the percent Bollinger Band. But if you enlarge it, if you use more candle data, data for larger time frames, then the responsiveness of this percent Bollinger Band is going to go lower. And so it is always the trade-off between the responsiveness and the certainty or reliability, not certainty, because there is nothing certain in the financial market and nothing certain in the trading. So we can say that if we are looking for more reliability, then we have to consider the larger time frame data. And if you want the plotting to be more responsive, then we have to rely on lower time frame data, as whenever there is a significant shift in near term, that will be reflected in these percent Bollinger Bands, and it won't take much time. So let us try out different combination. Let's change it to 50, and with the 50 you get this plotting where we have this percent Bollinger Band now showing the deviation from the median price for quite longer time. We have this plotting which has been consistently below zero for almost 6 hours now. But if I change this calculation period and if I make it 20 again, then we will see that price has now again reverted back on the inside of these lower band of the percentage Bollinger Band. So this is one of the change which we can observe whenever we use this different calculation period. So depending on what is the calculation period, we will have different responsiveness, different reliability for these indicator. Now let's try with a combination even with even more calculation data. So this is now based on 100 hours. So in such a large calculation period, you will see that extreme values are reached quite less frequently, and when those extremities are reached, those are sustained for considerable period of time because the trend doesn't really change much often, and because of that we have this kind of formation where the extreme values will then be forming quite less, and whenever those extreme values form, we will have those in place for significant amount of time. So that's the major takeaway looking at this plotting of the percentage Bollinger Band with the extended parameters and also for the extended time. Now let me restore it back to some lower time frame. So I will again edit it and make it 24. All right. So this is the 24. So we have now 24 hours worth of data, that is single days data, being used for calculation of these indicator. Standard deviation up and down in a simple percentage Bollinger Band, we can't really keep different deviation levels for the upper band and the lower band. But here we can give different combinations. We can have the standard deviation of 2 on the upper side and standard deviation of 1 on the lower side. So we have these two different parameters on these lines. Then we get these moving average type. We can go with the, I will first restore it back to the default setup. Okay. Now coming to the moving average type, we can use the exponential moving average, or we can use these other parameters, the weighted moving average, DEMA, the double exponential moving average, or the TEMA, triple exponential moving average, or TRIMA, the triangular moving average. I have explained to you these various types of moving averages in the prior sessions. So I hope you are now quite aware of these particular moving averages and how they are used, and what we can do with these various combinations. And if you haven't really watched those sessions, I would suggest that you can go to the earlier videos done in this series and take a look in for any particular combination of these moving averages, how these are calculated, and what is the best way which to use these indicators for our advantage. So we have this combination provided to us where we can use all these different types of moving averages while plotting the Bollinger Band, percent Bollinger Band. So if I change it to say T3, we will have a lot more smoothing in terms of this output value of the percentage Bollinger Band. Let's see what happens when we change the moving average type. So now this is being done using the T3. If we use say SMMA, we are observing certain changes here, and these extreme values have become quite extreme, and we have certain occasions where the deviation was quite large compared to this median price, and because of that, in this case, the percentage Bollinger Band output has even crossed about 200. But this wasn't really the case when we were using a different combination of the average. If I now restore it back to say SMA, here the deviation has now reduced, and we don't even have a deviation above 100. So it has converged quite close to this middle price, so that's interesting. And these changes happen whenever we use these different types of setup. So all moving averages have their own interesting properties, and because of that, these changes are evidently there in this indicator also. Now let's try what happens when we use LWMA. So with this LWMA, there is not much of a change. If I use HMA, the change is not that much, but still quite significant enough. And T3 we have tried. MAMA, MAMA is also showing a different plotting. KAMA, where we have the deviation on very few occasions. TMA, again here the occasions on which we have significant deviations have reduced. The double exponential moving average. All right. So these are some of the examples which I am trying to use to show how we can customize this indicator with different types of moving average, and how with each type of moving average we get quite a different interpretation of the price volatility for the underlying instrument. So that's something which we have to keep in mind and plan our trades accordingly. Now coming to the aesthetic versions of the editing option. So if you want to style it up, if you want the indicator to look more colorful, we have all sort of options here. As the chart is looking too dark, I can brighten it a little bit. So I have used white as the choice of color for this plotting of the output of percentage Bollinger Band. Then we have all these options provided to us. If you want it to look like a bar chart, here we can go for this style of the bar chart. If you want the plotting to be in the line, but with a different styling, then you can go for that as well. The width can be increased or decreased, and also the transparency option is also there. If you want the plotting to look a lot less prominent on the chart, if you have multiple indicators in place, and it shouldn't look really cluttered, in that case you can reduce the transparency, so you will have a good idea of what the output values are, and it will be easier on your eyes as well. So it won't take charts much space. I think the space will be almost the similar. Only thing is that it won't be that much evident. Okay. So now I will keep the transparency at 60%. Then let's see what we can do with these levels option. We can determine the levels as per our requirement. What are the levels which we consider to be significant levels? If you want the combination to remain at 0, 50, and 100, you can keep it. But if you feel that certain indicator, certain instrument actually has a tendency to shoot above or below these levels, and it happens quite often, then to suit your trading strategy to that particular indicator, you can define the levels as per your observations, and in that case you can go with a different combination. Suppose if you want to take this lower level into further negative territory, then you can do that also. And if you want to change any of this level to any of the extent, you always have this choice. Even the middle level can be tinkered with. You can bring it low or take it higher. And similarly for this upper level. So now I have changed the combination to reflect -10 as the lower level and 110 as the upper level. So we have bit of different plotting in this case. All right. Now coming back to this output, the levels here, we have this advanced version. When we want the recalculation to be done on new candle only, then we have this option of checking this box, and we will have the recalculation done on new candle. Whenever there is plotting of the new candle, only on that candle the output value of this percentage Bollinger Band will appear. Otherwise will remain fluctuating for whole of the candle period. So if you want to fix it for the start of that particular candle, then all you have to do is opt for this. If you want the calculation period under consideration to be highlighted, then check this box and you will have this highlighted portion for your calculation period. So it will become quite evident what is the calculation period under consideration whenever you have this plotting on your chart. If you want the calculation to be done on the custom data, then you can opt for these options provided here while customizing the indicator. So you can opt for the instrument from the chart, or you can keep it fixed to the Euro USD. You can do the similar thing for the candle period. You can opt to use it from the chart, or anything from this 10-second to 1 month can be used as the chart's time frame. The spread side, whether you want to use the ask or the bid as the side for calculation of the indicator, you can do that as well. And if you want the indicator to be plotted on all candle periods, then you keep this box with this tick. But if you want the indicator to be plotted only on certain time frame, then all you have to do is opt for these boxes, and only on those candle time frames the plotting will be done. And on other candle period, no plotting will be done for this percentage Bollinger Bands extended indicator. Now I am going for a 30 minutes as the candle time frame, and as you can observe, there is no percentage Bollinger Band plotted on this lower side. But now if I change it again to 15 minutes, it will be there. And if I again change it to say 4 hours, it will vanish. So it is going to appear or vanish depending on the candle period under consideration for calculation of these percentage Bollinger Bands. All right. Now let me again check the advanced options, what more can be done. Now I will opt for this show indicator on all candle periods. All right. Then we come to the base period. The base period can be anything from 4 hours to 1 month, or you can even opt for this. So there won't be any base period for calculation. If you want to go with a day as your base period for calculation, you can do that as well. So these are some of the combinations which you can utilize while making trading decisions using these percentage Bollinger Band extended parameter indicator. And I hope you have been able to understand certain examples used by me to better explain these uses of the given indicator. But these are only for representative purposes. You can always figure out different combinations, other ways to to use this indicator in a best possible manner. So For that, it's very important that you play around, you try to do some experimentation and try to figure out the ways which will get you a formation which will have higher probability of getting the trade on the right side of the trend and giving you money. So that's it from my side for this explanation. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too for trying out these indicators and and many more indicators. You will have to use the JForex platform, the link for which has also been included in the bio. So do check it out. Thank you all for joining in. Have a fabulous day ahead. See you next time around with a new indicator. Till then, goodbye.